Real estate ranks right at the top with investors looking to build wealth, but like any investment, it requires skill, knowledge, and yes, a little common sense. Hello, I'm David Nelson. Welcome to Newsmax. To find out where some of the best opportunities lie right now, I've asked one of the leading experts in real estate and wealth creation to join us, Kathy Fettke. Kathy is the CEO and co-founder of the Real Wealth Network and host of the podcast, The Real Wealth Show. And she's right here in the studio today. Kathy, welcome. Thanks so much for being with us.
Thank you.
Kathy, we came through the financial crisis and it affected not just the stock market and the bond markets, it also affected real estate, and that got hit hard as well. But like a lot of investments, real estate has come a pretty long way and is up substantially off the lows. Yeah. Are there still real values out there? And if so, where are they?
That is such a good question, because so often the media talks about a housing market, and you and I both know there's no such thing. There's a lot of little neighborhoods across the country where some are performing differently than others. Some markets are completely overpriced right now, and if there's one message I want to give people, you've got to know what you're doing before you invest in anything.
Well, that begs the question, how do you do that? I mean,
yeah.
Is there a metric to look at a market and know that in fact it is overvalued?
There are. The one most important thing we look at is jobs, and I'm sure that's the same for any investment, but we're going to follow the jobs and buy little houses and properties around those jobs. And there are, believe it or not, parts of the country where there's job creation happening.
I was taught long ago, by actually my mother, who was in real estate for a short time, and she told me one of the most important things in a real estate investment is location. Is that still the most important?
Absolutely.
And if that's true, what's number two?
Okay, well, first, coming back to location, it would be jobs. Some people like to buy property and they don't need a job. So, if you're buying a property in Malibu, maybe a lot of those people don't work, or perhaps Florida, where a lot of retirees are going, and so maybe we don't need to follow jobs there. But and you also have to be careful about going to an area where it's only dependent on a certain kind of industry, like North Dakota. A lot of people are buying property there.
But well, that makes sense. I mean, the oil boom is going on there. So are there values
there?
That makes you nervous.
Yes, it's not diversified enough. In the 80s, Texas had a huge housing crisis because they were too dependent on the oil industry. Since then, Texas has completely diversified. They have the largest job growth in diversified industries than anywhere in the country.
So diversification is a big part of your thesis here.
Diversification in where you buy and also in employers.
Talk to me about hedge funds for a minute, because I've seen several of your videos and they're very instructional. And by the way, if you're everywhere, no matter where I turn, I find you're on CNBC, CNN. You're virtually in every newspaper out there that focuses on real estate and finance. But you're on record saying that the hedge fund community, may have created a bubble in certain areas. How did that happen?
Well, the hedge funds started to see what we've been seeing for years, and that is that you can really make money in real estate in any market, whether it's up or down. And that's the truth in the stock market as well. You just have to know what to buy. So when most people buy, they buy high, sell low, they lose money. And so, the idea is buy low, sell high. But
it's kind of like stocks, I guess.
Exactly, and that mistake is made all the time. Wow, this went up 28%, I'm going to buy it now. Wouldn't you have rather have bought it before it went up 28%? Got to know how to get in early. Right?
Well, it makes sense, but let's talk about something that's happening right now, because a big part of the real estate recovery, in fact, a big part of investments in general recovering off the lows, has been, in fact, interest rates. And certainly Chairman of the Fed, Ben Bernanke, has been a friend to real estate and a friend to the stock market. They've kept interest rates low, and they've had quantitative easing to take bonds off the market.
Right.
But back in May, we saw a huge spike in interest rates, almost unprecedented on a percentage move, because of the word taper. Chairman of the Fed said that they are at least planning on tapering, and that means reducing quantitative easing. And then, of course, the next step, somewhere down the road, there's going to be an interest rate hike.
Yes.
How is this affecting your investments right now, and what are the prospects for the future?
Well, when interest rates go up, of course, things tend to slow down, and that's the purpose of it, to slow down a growing economy. When interest rates are as low as they have been, we were starting to see bubbles forming where people could afford homes that maybe they couldn't otherwise. So, if we know interest rates are going to go up, and we do know that, we've got to keep that in mind and always calculate what the payment would be at 6%, 7%, even 8%. And don't buy anything that wouldn't make sense to the average person in that market.
What would you tell a homeowner or somebody purchasing a home right now? There are attractive, adjustable rate mortgages out there, and then there's also fixed rate mortgages, and the rates are still near historic lows. Would you tell them to go fixed or adjustable?
Oh, get a 30-year fixed loan and keep it forever. There is no other country that offers that. They think we're crazy for offering 30-year fixed rate loans. Imagine for a moment that you bought, and you don't go out and do this without education, but let's say you own 10 rental properties on a fixed rate mortgage. 20 years from now, what is that payment going to feel like versus the rental income you're getting every month?
Wow. That's a lot to think about. Well, what is it affecting these interest rates? Is it going to, if interest rates go up, which will be hard to hit? Will it be mortgage origination? We'll see that slow down. Or will housing prices, start to fall, or could both happen?
All of that could happen in different marketplaces. In the 80s, we had interest rates in 15%, 16%, and
Wow.
real estate prices went up.
Real estate prices went up with a 15% mortgage.
That's right,
Wow.
because when you look at affordability, really what people say is, can I afford this payment versus rent? What's going to be the best deal for me, renting or owning? And you don't care about the interest rate, you want the deal. And so housing prices were so depressed that even if interest rates went up in some areas, it would still be more affordable than rent.
You know what I'm gathering from all this, Kathy? It seems like there's a lot of education here, that you've got to really do your homework.
Oh,
and I
do.
think someone like you would be an excellent coach. Thank you so much for being with us today.
It's been fun, thank you.
We've been talking with Kathy Fettke of the Real Wealth Network. Thanks for joining. I'm David Nelson for Newsmax.